Hello and welcome to the latest episode of Zach's Tech Talk Tuesday. I believe our first episode of 2019. So happy New Year still. I think we're right on the cusp of not being able to say Happy New Year anymore. But either way, my name is Ryan McQueeney, your host as always. Today we're going to check in with a few trendy growing tech stocks as investors look to pile back into the beaten down segment. And a few of the beaten down segment's favorite picks amid a much better stretch of trading over the past few sessions here. We're rebounding hard after the Christmas Eve sell-off. Haven't quite hit much resistance to the rebound yet. That could certainly be coming, but it does look like, at least for now, the Christmas Eve low is holding up strong. We'll get to whether we're going to retest new highs or retest that low first at the end of today's episode, because that's part of this conversation. But I think before we get there, let's check in on a few news stories and a few movements in a few of the big, popular, trendy, headline-making stocks in this world of growth and momentum here in the tech industry, tech sector. You guys probably already know the ones I'm going to talk about because they all made big moves yesterday. We start with none other than Twillio, which surged 9.5% on Monday on the back of renewed analyst optimism and just regular retail investor optimism. This is also probably one of the three stocks I'm going to mention today that might need an introduction, if you will. So for those of you who don't know Twilio, it trades under the ticker TWLO, and it is a company that delivers cloud-based communications platforms that allow developers to send automated phone calls, text messages, and other chat functions. In other words, Twilio APIs can be easily implemented into other software and apps and people's proprietary platforms and applications. And, while you may not have heard of it, you've probably interacted with it. It's responsible for many of the live chat boxes and programmatic messages you likely receive these days. That's just kind of the way customer service and mass customer and client communication and advertising is going these days. We're seeing these automated chats and these programmatic texts more and more frequently. And Twilio is a popular pick for businesses to deploy those types of communication initiatives. So Twilio had a crazy 2018. If you just pull up the chart, it is a wild one to just look at. It started the year around $26 per share, and it eventually found itself at a 52-week high of $100.50 per share. That's worth about a 285% climb, which is just asinine. Definitely a wild year for the longs. You definitely were excited if you held this one. Made it through December a little bit better than others also. And this is the exact segment, this world of segment of this growth and momentum. This is the exact part of the tech world that really sold off, really starting in October, but in December as well. This one actually held up a lot better than some of the others in this atmosphere, especially some in this software side. Only ever fell about 20% from those highs and did so very quickly and briefly. It's currently, with Monday's gains, just a few bucks from the top end of its range. So, it's been kind of up and down over the last several months, but definitely not a steep decline, as steep of a decline as some of its peers even maybe have seen. And as I said, I mentioned some analyst coverage causing yesterday's climb. There wasn't actually a ton that I would say directly explains that 9.59% move. Baird analyst William Power did reiterate his outperform rating on the stock and added it to Baird's fresh pick list, which is an interesting little analyst kind of nod there. And besides that, I think people just, with the past few sessions being, as I mentioned, a whole lot stronger, and with people optimistic that the Christmas Eve bottom will hold, finally getting back into these software stocks, these young little tech stocks, playing around with a little bit more risk. Whether that's a good thing or a bad thing, this is definitely something that's going to come up on your growth stock screens and your tech stock screens. It's got a long-term growth rate of 9%, EPS growth rate of 9%. That could very well tick higher as the analysts come in. It's still limited coverage on this just because it is kind of young still in the grand scheme of things. Earnings are expected to finish the current fiscal year with growth of 158%, triple-digit earnings growth in 2018. Early estimates have 2019's growth hitting 31.3% on top of that projected 2018 total. And I mention these as early estimates and kind of tepid projections because analysts just have not been able to get a solid grasp on what Twilio's going to do so far. This thing's been crushing estimates left and right. 123% positive average earnings surprise over the last 4 quarters. It's finally creeped from that adjusted loss of 3 or 4 cents per share into the adjusted gains, adjusted profits world, which we often see just regardless of a positive beat and the magnitude of a positive beat, we often see investors really reward companies that are able to get above that break-even line for the first time. Hey, you're profitable. Let's celebrate. Let's pile back into you. So I think Twilio is one to watch. And again, it kind of contributes to this conversation that we're going to discuss here at the end of the show. Moving on, we also had Roku making noise yesterday. The video streaming hardware and software company skyrocketed 24% in Monday's session after it released preliminary earnings results. That positive announcement was much needed as it's been a completely different story for Roku. Yes, it did run up strongly in the first half, a little bit more than halfway through 2018. Was up about 50 or 60%, I should say, to its 52-week high. But the peak to bottom here was much more drastic than something like a Twilio saw, really fueled by a couple of disappointing earnings results that kind of underscored a lot of fears that people had about Roku, especially just thinking, I can remember its IPO day. These are the same things we were talking about causing these results. People worried about how long the growth could last and the competition in the industry stealing some of its business. At one point, just a few weeks ago, before it found its new bottom, or what it hopes to be its new bottom, it was down about 65% from its highs. So definitely had stumbled into a really treacherous individual bear market there. So what happened yesterday? Well, as I said, preliminary earnings results released. Reported active accounts up to 27 million in the fourth quarter. That's a 40% increase year over year. Total number of streaming hours viewers engaged in the quarter jumped 68% year over year to 7.3 billion hours. That's crazy. For the full year, because that's Q4, for the full year, 24 billion streaming hours, a 61% increase from 2017. So those are good numbers, and here's why they're good numbers. First of all, active accounts up 40%. That's pretty impressive user growth. I dare you, or I challenge you to find me any company, be it a social media company, be it a software company, be it this kind of niche video streaming company that's seeing 40% user growth right now. That's a rare find. But for me, I'm looking at number of streaming hours outpacing the user growth. So what that says to me is that individual users are also spending more time on the platform. One thing we talk about with Roku, besides its hardware devices, which I'm sure you guys are familiar with, is the Roku platform itself and being able to monetize that in the future, whether it's through advertising or maybe premium channels, that type of stuff. So the fact that the users that are coming in are spending more time on the platform as well, I think that's a good sign for that conversation. We should also note that Roku announced last week that it's adding to its mobile Roku channel with subscriptions to previous channels such as Showtime, or premium channels such as Showtime, Stars, and Epix. So again, kind of sweetening the pot for the Roku platform, specifically this mobile platform, adding more features, adding more options. We've seen that be something that resonates well with cord cutters. Whichever platform they've decided to use, they like this idea that they have as much choice as possible, and I think that's a good move. We'll see where Roku goes, though. It's still a long uphill battle to go if it wants to get back to the heights that it was briefly at in 2018. And as I said, some question marks about competition, among other things, but definitely 24% move in yesterday's session. Going to be on a lot of people's radars this week. Finally, I wanted to mention another tech stock that's always making headlines, and that is Square. Stock added about 4.4% in Monday's session. Just running through a few of the same things we've been talking about with the other two stocks. Square's run to its 52-week high in 2018 was to the tune of about 140, 150%. It was the tech momentum stock for the first several months, the first half at least of 2018, a little bit more than half of 2018. It was the one everybody wanted to pile on. It ended up flushing out about 40% of its value over the course of the next several months. It was really, it quickly quickly transformed from the tech momentum stock to the warning sign about what the market was going to go through from October on. Was that, the formula we were looking at, the stocks that were getting punished the most outside of like energy were stocks like this that had, tech momentum and growth features and were already up so much that it was a no-brainer for investors to cash out those profits and just sit on the sidelines and wait for a better opportunity and just not really deal with the selling. That the Square was the epitome of that. And Square's downtrend lasted really until Christmas Eve. Basically, it was that market-wide flush out was like the last moment, it felt like. And, people are really optimistic, or at least hoping, fingers crossed, that bottom holds and this piling back into these stocks lasts. Square, in terms of news, still generating attention from last week's announcement of a new CEO appointment. It added Amrita Ahuja. I might be pronouncing that wrong. You guys know me. I get names wrong. That's my thing. I'm sorry about that. But she is replacing the company's previous CFO, Sarah Fryer, who announced her resignation in October. Fryer is moving on to become a CEO at social media network Nextdoor. That was one thing also that contributed to October selling. That was a tough stretch for everybody, but Square specifically, it was like, whoop, and they're leaving their CFO. They're losing their CFO. So that's never an easy thing to go through. This, you could say, kind of an extended search, October to now, several months search. I think makes sense. You'd want to spend time to get a high-profile executive like that. I think this was clearly well-received by investors, and she definitely has a lot of experience. For the past almost decade now, has been working with video game behemoth Activision Blizzard, has held a number of finance and strategic roles across the company, was currently the CEO or CFO of the Blizzard Entertainment branch of that company. I just wanted to mention also, as we're mentioning Activision Blizzard CFOs, quick aside here to talk about that company. Weird little executive departure trend at Activision Blizzard. There's been another CFO at that company making news. I think the CFO of the full Activision Blizzard umbrella company, Spencer Newman, he's actually going over to Netflix. And then it was a dramatic departure from Activision too. Was put on leave and then ended up, the news came out that there was a full firing after, I guess Activision wasn't too happy that he was just jumping ship and breaking his contract to head to Netflix. So now two major finance executives gone at Activision Blizzard, potentially a cause for concern over there at the video game company. Anywho, as I mentioned, Square to me is the epitome of the tech growth picks. It's the fun, sexy one. It's the one with the famous CEO, and it's the one everyone loves talking about. This is not random. This is not for no reason. This is a good company with a good product. and a good future. It's very well poised to create new products and new features and new services and really cater to the growing demand for payments processing and mobile commerce services among small to mid-sized businesses around the world. This is a lot of untapped growth and a lot of untapped potential beyond what we've already seen from Square. It's doing a really good job of already expanding its product base and its services base. It's listening to its merchants and adding new features. It's seeing what it's not. It's looking at merchants that it's not appealing to right now, and it's finding out why, and it's getting into that. It's starting to add new financial services features, financing, that type of stuff. And it's one that I think really has a good customer satisfaction track record. I think Square merchants typically are satisfied with what they're using, and they're satisfied with the new products that the company is offering. So that's a really good thing. And that should be the standard for these types of stocks. So you want to make sure that if you're interested in some of these potentially renewed high flyers, that they're living up to that standard as well. Clearly, that's what people are seeing in the likes of a Twilio, solid business, solid management, that types of things. I'm a little bit less familiar with those elements for Twilio. But even still, we have to understand that these are not untouchable stocks anymore. We just learned that in the last few months of 2018. And so the story here for Square and for Roku and for Twilio is, how long is this rebound going to last? What comes first, a retest of the highs or a retest of the lows? Can we be confident that we're going back to new highs in tech? Can we be confident that the trend is going to favor these smaller tech growth stocks again? I think just looking cyclically, if we're still in a historic bull market, if we didn't just declare it over with the right down to 20% sell-offs, the NASDAQ flirting with bear market territory for a couple days, actually. If we're still going with this historic bull market, then, it's got to run out of gas. It's got to run out of steam at some point. And typically towards the end of the cycle, these are not the stocks that everybody loves to hold. Typically towards the end of the cycle, you start piling in, maybe not the right word, but cycling into the more defensive picks, the recession-proof picks, that type of stuff. I'm not saying there's a recession on the horizon. You can look at a lot of my other commentary throughout a lot of different platforms on Zacks.com as to why I don't think that's necessarily right on the horizon. We can certainly have a bear market without a recession, though. And right on the horizon doesn't mean a recession couldn't come in 18, 24, 36 months, something like that. But, that would be, I think, the counter argument to getting back into these stocks. The other side of the take, which, I don't want to call my perspective. I'm conflicted on which way I feel about this, but the other side of the argument is, that flush out and that sell-off just brought all the valuations back down to more reasonable levels. Of course, all of these still have relatively stretched valuations, as we come to expect from these types of picks. But now you're able to get back into them at valuations you haven't seen for months, in some cases maybe a year or two, a lot of discounts compared to where we were at a few months ago. So some interesting things to think about. And I think, when we talk about this whole group, this whole segment, the ones that we went over today, Square, Roku, and Twilio, are going to be ones that a lot of people have on their radar. So important to keep your eyes on those ones. I think that's going to do it for us today. As a reminder, if you feel that we missed something, or if you want us to cover a different story, feel free to shoot me an email at podcast@zacks.com. Make sure to check out all of our other exclusive audio content, all of our other wonderful podcasts at zacks.com/podcast. Please remember to subscribe and leave us a rating on Apple Podcasts. If you enjoyed the show, let us know. It really helps. And we're also available on SoundCloud, Stitcher, Spotify, basically anywhere you can get a podcast these days. Thank you so much for listening to the Zacks Tech Talk Tuesday podcast. We'll see you next time.